Okay, let's dive right in. Imagine waking up this morning, Monday, March 2nd, to find the global financial system just completely on edge. Well, that's not imagination. That's what happened. Markets have opened in, and I'm not exaggerating here, full-blown crisis mode. And it's all because of one single geopolitical flashpoint. We're going to unpack exactly what's going on, starting with the raw, kind of shocking numbers.
First up, the lifeblood of the global economy, oil. Look at this. Brent crude, that's the big global benchmark. It didn't just go up, it exploded. A 13% surge, rocketing right past $82 a barrel. Now, to put that into perspective for you, this isn't just a bad day. This is a massive shock to the system, the kind of thing you see maybe once a decade. It's really the market's version of a heart attack. It's sudden, it's violent, and frankly, it's pretty scary. So when panic like this hits, you have to ask, where does all the money go? Well, it runs for cover. And in the financial world, that means one thing, gold. We saw it jump 2.4% to an incredible $5,371 an ounce, which is a new all-time high. But here's the really wild part. Gold is already up nearly 20% this year, and we're just getting into March. That tells you the anxiety, the nervousness, it was already there, just simmering under the surface.
And of course, this wave of fear, what traders call a risk-off event, it slammed right into the stock market. You can think of risk-off as investors just suddenly deciding, hey, the party's over, cashing in their chips, and running for the exit. And because the Asian markets opened first, they gave us the first taste of the damage. Japan's Nikkei, down 1.5%. Hong Kong's Seng, down 1.6%. It's a classic stampede away from stocks when the future suddenly looks this uncertain.
So what's the one domino that knocked over all the others? It's this, right here. After a weekend of escalating tensions and military action, the Strait of Hormuz, which is, you could argue, the most important artery in the entire global economy, has been shut down. This isn't just another headline. This is the direct cause of every single shocking number we just looked at. Okay, so to really understand why the markets are panicking, we need to go to the source. Let's zoom in on this one tiny strip of water and see why its fate has a direct impact on pretty much everyone on the planet. So here are the basics. The Strait of Hormuz is this small but incredibly mighty passage of water separating Iran and Oman. And the key detail here is its width. At its narrowest point, it's just 33 kilometers. That's about 21 miles wide. And critically, it is the only way to get from the Persian Gulf out to the open ocean by sea. There's no other way out.
Now just look at these numbers. It's honestly staggering. 1/5, 20% of all the oil shipped by sea on the entire planet squeezes through this single bottleneck. And it's not just oil. A fifth of the world's liquefied natural gas, or LNG, also has to pass through right here. So when Hormuz shuts down, it's like kinking a hose that's watering a huge part of the global economy. The energy just stops flowing.
And let's put that 20% figure into real terms. We're talking about 15 million barrels of crude oil every single day that are now at a complete standstill. You know, all the major Gulf producers, we're talking Saudi Arabia, the UAE, Kuwait, Qatar, they all rely on this one route to get their product out to the world.
All right, now let's trace that shockwave. Because a problem this big, it never stays in one place. We're going to see how closing one strait in the Middle East sends these tremors out to every corner of the financial world.
What we're seeing play out is a classic financial playbook. It's often called a war premium. And it goes like this. In times of crisis, tangible stuff like oil and gold, they become king, so their prices go up. The US dollar also tends to get stronger because it's seen as the world's ultimate safe place to park your money in turbulent times. And yeah, you guessed it, stocks take a nosedive as investors dump anything that even smells like risk.
And even within that big market reaction, you get some very clear winners and losers. On the winning side, you've got the energy giants, your BPs, your Shells. Why? Because the value of all the oil they already have in their reserves just skyrocketed. But on the losing side, you have anyone who uses a ton of energy. Think about German heavy industry or the big airlines who are now facing this immediate painful shock from higher fuel costs.
So the big question is, where do we go from here? Right now, every trader on the planet is just glued to their screens watching for just a handful of key signals that could turn this whole situation around. So let's look at the 3 things that matter most right now. Okay, first, all eyes are on OPEC, the big cartel of oil-producing nations. Are they going to call an emergency meeting? They could decide to pump more oil from other places to make up for the shortfall and, calm prices down. Second,
there's the United States. Is the White House going to tap into its strategic petroleum reserve? This is basically the country's emergency stockpile of oil, and releasing it is a really powerful way to tell the market, hey, there's a ceiling on prices. And third, and this might be the most crucial one, diplomacy. Oman has always been the quiet go-between in this region. Can they get the different sides back to the negotiating table and de-escalate? Seriously, a single headline about any of these three things could send markets soaring or sinking. And finally, let's just zoom out for a second. Because this crisis, it didn't just happen in a vacuum. No, it landed in a market that was already pretty shaky to begin with. It's so important to remember that February was not a good month for stocks. The Nasdaq was down 2.5%. The S&P was barely flat. The market was already fragile, dealing with rising tariffs and a bunch of economic uncertainty. This event is like pouring gasoline on an already smoldering fire. This quote from one of the analysts we read really captures the mood out there. They're saying this is the most geopolitical uncertainty we've faced since the run-up to the Iraq War back in 2003. Now, that doesn't automatically mean a market crash, but it's a huge signal that these wild swings we're seeing, they aren't going away anytime soon. The future just got a whole lot harder to predict. So we really end up right back where we started. Oil's at $82, gold's at a new record, and global markets are feeling the pressure. And it all hinges on the answer to this one question. The world's most critical oil choke point is closed. How long can it actually stay that way? A day? A week? A month? The answer to that is going to determine where we all go from here.